Good morning to all of you. My name is Laurent Giovacchini. I'm the Deputy CEO at Soprasteria, and I'm also the co-chairman of the Economic Sovereignty and Security Committee of the MEDEF. I'm honored to welcome Mr. Marcel Haag from the European Commission. Marcel Haag is Director Horizontal Policies at the DG FISMA, Directorate General for Financial Stability, Financial Services and Capital Markets Union. And I'm also happy to welcome Alexandre Eshgozi, Global Blockchain Practice Leader at Soprasteria.
Good morning, Laurent. It's a pleasure to be here with you today.
Mr. Haag, we share a common concern with most bank executives around the world. According to research Soprasteria conducted with Forrester, 70% of 730 banks' decision makers interviewed consider security as a critical priority to be addressed. Cyber threat is, of course, the number one threat for the global financial system. According to the European Commission Digital Finance Fact Sheet 2020, cyber attacks on financial institutions rose by 38% during the pandemic. But another critical threat is our financial sovereignty. Are we able to finance our strategic activities with our own market? Securing our competitive economy starts with securing our financial autonomy and is a condition to affirm our strategic autonomy. What do we do at Soprasteria? We work at securing technologies in strategic economic activities such as defense, aerospace, and financial services. But how do we secure our financial autonomy? As a European leader in consulting, digital services, and software development, we invest in sovereign cloud solutions as well as cybersecurity solutions. We've just acquired a French cybersecurity expert called Eva. As a matter of fact, 80% of protective solutions come from an extra-European origin, according to Institut Montaigne. That's why we actively contribute to finance cybersecurity startups with a dedicated fund by Brian 3. Another critical domain we invest in is data sovereignty. We act as a part of the European ecosystem, joining Gaia-X initiative to contribute toward building the next generation of data infrastructure. As a member of the MEDEF, the leading network of entrepreneurs in France, I also have the opportunity to collaborate at European scale and more especially to communicate with the BDI in Germany and Confindustria in Italy. We signed an agreement 2 years ago which insists on European strategic autonomy. But in this context, the European Commission has obviously a key role to play. So Mr. Haag, if I may, can you give us the European Commission perspective on the role of the financial sector in supporting Europe's open strategic autonomy? What are the major risks identified as priorities to be addressed in the financial ecosystem? How can we address the trade-off between innovation and regulation and facilitating a strategic and open autonomy? The floor is yours.
Thank you very much, and thank you for having me at the Sopra Summit. As we all know, the geopolitical context has changed, the context in which we are operating, and so have the challenges that we are facing. So the EU needs to adapt and strengthen its open strategic autonomy. That means shaping global governance and creating mutually beneficial relations, while at the same time increasing its resilience and protecting itself from unfair and abusive practices. In that context, the financial sector is key. A well-functioning financial system in Europe is essential for reinforcing the EU's resilience and autonomy. Open strategic autonomy requires strong European players that have the space to innovate within a clear and predictable regulatory framework. We need legal certainty for the supply side and the assurance that markets are transparent and safe for the demand side to develop our European markets. And here, I think we have to be clear about one thing. Innovation and regulation are not enemies. They can be friends. Smart, forward-looking regulation can create the conditions for innovation to flourish. Regulation is the key to provide legal certainty, the legal certainty that market players, both established and new, need to confidently develop and offer new innovative products and services. Regulation is also vital to manage risks and thus build this trust that investors and consumers need to fully buy into these new offerings. They need to know that sound rules protect them against abuse, theft, and fraud. Innovation in finance has great potential, but it's not an end in itself. Digital finance has an important role to play in building a more competitive, resilient, and inclusive economy, in particular, now that Europe slowly overcomes the COVID-19 pandemic. However, for all businesses, citizens, and our society as a whole, to be able to make most of this innovation, we need to catch up. Yes, we have many promising innovative firms in the EU and plenty of new products and applications coming to the market, but we're not leading the race. The work we have launched with our digital finance strategy in the EU is designed to help change that. It is vital in making sure that Europe thrives, attracts the best ideas and the most creative minds. It is essential in ensuring that we can set standards with our partners across the world, which will enable us to seize the benefits of the digital transformation while managing the challenges and risks that inevitably come with it. These efforts go hand in hand with our work to give our capital markets a much needed push. Efficient capital markets are key in fostering innovation by offering businesses, in particular SMEs and startups, access to the funding they need to turn their ideas into successful products and services. At present, EU capital markets are still small and fragmented along national borders. This means that while firms serve and compete on pan-European markets, their financing relies on our local financial ecosystems, and they cannot take advantage of a large and developed internal market for capital. We have seen the consequences. EU companies lack sufficient equity financing and often end up listing outside the EU, driving away jobs and growth. Prominent examples from recent years are Spotify, one of the world's largest music streaming service provider, which listed on the New York Stock Exchange, as well as BioNTech, which chose NASDAQ. If capital markets in the EU cannot provide the scale and services that issuers and investors are looking for, we risk impairing our competitiveness and innovative capacity. That is why the EU is working to build a capital markets union. This is a priority for us. Since the start of this work in 2015, the Capital Market Union has already delivered on several fronts, including many targeted measures to support access to finance for companies, in particular SMEs. But we have much more to do. The Capital Markets Action Plan that we adopted in autumn last year sets out new ambitious steps. So in the coming weeks, we plan to put forward new measures to advance towards these goals. One example is the new European Single Access Point, which will provide seamless EU-wide access to all relevant information, including financial and sustainability-related information that companies publicly disclose. This will make businesses more visible to investors and help to attract funding. Our strategic autonomy also depends on addressing the pressing global challenges like climate change. What is important here is that capital markets support the green transition. And this is actually an area where Europe is very much a leader. Our taxonomy, for example, is designed to attract investment into activities supporting this shift and to help SMEs, in particular, to become more sustainable. At the same time, climate and environmental risks are material financial risks, which financial institutions need to identify and manage. We need to ensure the resilience of the financial sector towards these risks. Addressing both sides comprehensively is the only way to ensure that the financial system fully contributes to the sustainable transition. The EU taxonomy, the Sustainable Finance Disclosure Regulation, and the new proposal on corporate sustainability reporting are examples of this approach, as well as the strategy for financing the transition. The twin transformations, digital and green, are leading to deep structural change in our financial system. One striking feature in the digital area is the entry of new players into the market on a scale and of a kind that we have not seen before. Technology companies, big and small, are making their presence felt. For instance, by providing bank-like services, such as extending credit or offering investment services. They're building new business models, bundling various services and products. And they are involved in the creation of new and complex distribution networks, which see financial institutions rely more on third parties, for example, cloud service providers. Big tech companies have the market power and capacity to scale up these trends and offerings. Competition is a priori a good thing. It drives innovation, can lead to better products and services, as well as lower costs, and it can help empower retail customers. But of course, it means that traditional financial firms have to adapt. And this is happening. Some are working with licensed third-party providers under the open banking framework set up by the Payment Services Directive. In other instances, banks are teaming up with big tech firms to offer non-financial services, for example, cloud-based ones. What is important here is that competition happens on fair terms. That is why the principle, same activity, same risks, same rules, is so important. It will continue to guide our work in the regulation of financial markets and financial services. Having said that, we need to make sure that we fully understand the impact this disruptive change is having. Are new players and activities creating new risks or influencing existing ones? Do our existing rules cover these risks? Do supervisors have the tools necessary to monitor them? We have asked the European supervisory authorities to help us assess these issues and advise us on how to best tackle challenges linked to the growing activity of new technology firms in the financial arena. We expect to receive this advice early in 2022, and this will inform any steps that we might take. We embrace, conclude on this note here, but they can never come at the expense of a true level playing field, market stability, and the protection of investors and consumers.
Thank you. Thank you, Mr. Agnes. Maybe a second question for you. The European Commission adopted, I think it was in September last year, a digital finance strategy. It includes a digital finance strategy and legislative proposals on crypto assets and digital resilience, so-called MiCA and DORA proposals. How to set clear and comprehensive rules for crypto assets? How can the same activity, same risks, same rules principle be implemented in an era of open banking at a global scale? And can we regulate traditional market actors, fintechs and big techs, in the same way?
Yeah, the digital finance strategy that you're referring to has four priorities that will continue to guide our work in the digital finance area in the coming years. These objectives are, we want to overcome fragmentation in the digital single market. We want to adapt the EU regulatory framework to boost digital innovation. And we want to promote data-driven finance. And finally, we also want to tackle challenges linked to the digital transformation, such as cyber risks. Like the rest of the economy, the financial sector increasingly relies on software and digital processes. That makes it vulnerable to attacks, as we have seen, especially since the onset of the pandemic. To tackle this threat, the Commission has indeed proposed, made a proposal called DORA, you mentioned it, which includes rules on digital operational resilience for financial firms. We want all these firms to have the necessary safeguards in place to mitigate cyber attacks and other risks to their digital resilience. Our proposal seeks to establish a much needed common unified framework for all parts and components of the financial system. A framework that is robust and consistent, but at the same time also proportionate. With our DORA proposal, we also address the risks of large technology providers that offer ICT services such as cloud computing to financial firms. The overall objective on these ICT third parties is to bring awareness and clarity. We want financial institutions to better understand and manage their dependency on third-party technology providers. Moreover, we very firmly believe that third-party providers of ICT services should be subject to EU-level oversight. This is crucial to protect financial stability by guarding against operational outages and failures. We have repeatedly seen in other areas how such incidents can affect users and whole parts of an economic ecosystem. But in the financial sector, where stability as well as protecting investors and consumers are especially important, we have more to guard against these kinds of disruptions. Not being able to access social media accounts for a few hours is inconvenient. Not having access to your accounts or leaving part or all of your savings as a consumer is simply unacceptable. The same goes for financial firms not being able to control the basic functions that keep the financial system running. The steady stream of cyber attack shows that we really have no time to lose. That is why we are working hard with Council and Parliament towards an early agreement on these new rules. You also mentioned our MiCA proposal. This is a proposal for legislation on crypto assets. Our framework for markets in crypto assets will introduce a bespoke regime for previously unregulated crypto assets, including the so-called stablecoins. This will provide legal clarity and help boost innovation. At the same time, we're creating solid rules for issuers and service providers that will prevent abuse, fraud, and theft, protecting investors and safeguarding market stability. Our proposal is fully in line with international discussions on crypto assets, including stablecoins in fora as the G7 or the Financial Stability Board. And we know that going forward, we and our partners across the globe will need to find synergies in this area, not least because the global and potentially systemic nature of stablecoins demands a common solution. This is something the Commission has been working on, for instance, with the US administration, and it will continue to push for. It's very good to see that our member states in the European Union and the European Parliament have been making progress in the negotiations on the draft legislation for markets in crypto assets. We urge them to keep up the tempo so that we can agree on the new rules this autumn. Crypto assets are evolving fast, enabling innovative homegrown firms to enter the market, while at the same time attracting retail investors. It is our duty as policymakers to put sound rules in place as quickly as possible. Closely linked to this proposal is also a pilot project for market infrastructures based on distributed ledger technology. The pilot will create a safe space for market players to experiment with issuing, trading, and settling securities using blockchain technology. This technology has the potential to increase efficiency, but we have to be clear about how it works in practice. The pilot will enable us to test in a setting that balances innovation and safety. It will run for 5 years, and at the end of this period, we will decide on whether to adapt our existing legislation to ensure it is effective in fostering responsible innovation. Crypto assets are one area where we are seeing a lot of innovation. Another hugely promising field is data. Data is an essential resource that underpins the growth and competitiveness of the financial sector. Data access and reuse can lead to more innovation, to more innovative tools, more consumer choice, and more competition in finance. As stated in our digital finance strategy, our aim is to ensure that data-driven innovation in the financial sector can flourish within a safe and enabling framework. That is why our key priority is to establish a European financial data space in line with the Commission's broader data-driven agenda. We want to ensure that all publicly disclosed company and financial information is easily accessible, especially for investors. Where possible, this information should be machine readable. The European single access point that I already mentioned will be a first step towards this goal. We will also support the uptake of innovative tools that make it easier for regulated firms to do their supervisory reporting. We will present in the coming weeks a European supervisory data strategy, which will streamline supervisory reporting and enable greater sharing among authorities at the EU and the national level. And we want to promote data access and reuse in the financial sector and beyond. For this, we plan to put in place an open finance framework by 2024. And here our aim is to ensure that the financial sector can fully embrace data-driven innovation in full compliance with data protection and safety rules. So you see, we have a lot on our plate. We have a lot on our plate. A lot has already been done, but there is still a lot to do going forward that will allow us to fully exploit the tremendous potential of the digital finance sector. Thank you very much.
Thank you, Mr. Haag, for this very comprehensive presentation of the ambitious program of the European Commission in the field of finance. It was very, very interesting. Now, Alexandre, as a tech innovator at Sopra Steria, What is your vision on how we can contribute to facilitate the EU regulation? What are the key projects that you work on, Soprasteria, to ensure financial sovereignty in Europe, especially in payments and cryptocurrencies traceability?
Thank you, Laurent. That's a very good question. I would start with two projects on which we work at Soprasteria.
Yes.
The first one is around central bank digital currency. What is more sovereign than money, I would say. So it's a very hot topic at the moment inside central banking institutions. And at Soprasteria, we started working with them and with central banks on these distributed ledger technologies since 2017. We've been providing our advice and our vision to central banks throughout the years on different topics inside these central bank digital currencies like privacy, architecture, or cost efficiency. We firmly believe that this technology touches the heart of the financial system, and its deployment will have an important impact on multiple layers of the payment industry. Countries like China, Singapore, the United States have made really good progress on retail central bank digital currency, while Europe and the French Central Bank are more active on wholesale central bank digital currencies. Our goal at Soprasteria on this topic is to stay, through our research and development, ahead of the curve and offer a sovereign solution that stays in line with regulatory requirements. Mm-hmm. You tell me what is more sovereign than money? I would say that there is one thing which is more sovereign than money, and it's identity. So the second topic that I would like to discuss is linked to identity, and it's the European e-wallet. A few countries inside Europe are pushing for a self-sovereign identity, so blockchain-based platform, and we firmly believe at Soprasteria that this is the right approach. We have been working on self-sovereign identities for the last few years. We created a platform which is called EasyID. However, what we believe, and I would say that the main difference is that we believe that payments need to be added to this wallet so that citizens have an all-in-one tool where they can access both their identity and their central bank digital currency. We have been discussing with the European blockchain services infrastructure, also at the European level, and we are part of some of the working groups over there to offer interoperability between those two solutions. So I would say that for the next 3 to 5 years, these are the two projects that we will be working on at Soprasteria and where we want to help our customers. Then I would like to discuss about cryptocurrencies. At Soprasteria, as you know, we push innovation to our customers daily. I've been in the crypto space for the last 8 years, started a bit early, and I saw the discussion shift from a fun tool to play with. When I started discussing to banks in 2014 about cryptocurrencies, it was a whole different market. However, I think that today it shifted to something which is critical for the future endeavor. They have limited or lower margins. They need to find new ways of getting additional customers. And I can give you an example of adoption of cryptocurrencies. We can take the state of El Salvador. El Salvador recently decided to put cryptocurrency, and specifically Bitcoin, as a legal tender. Mm-hmm. So they've put Bitcoin as a legal tender, and in the last 1.5 months, they managed to onboard 3 million people, when with the traditional banking ecosystem, it took them 50 years to onboard 2.5 million people. So obviously, what you get out of this is that cryptocurrency is a tool which can be used for good, but you need to make it right and use it right. Worldwide, governments have started to regulate crypto assets. Mm-hmm. And we're here to help our customers choose the right tools and make the right decisions. Today, what I regret the most personally is what is happening around stable coins, not on a regulatory perspective, because I think that what Mr. Eck discussed and what the European Commission is working on is a good step to legitimate cryptocurrencies and stable coins. But today, most of these stable coins in circulation are based on US dollar, while only a fraction is based on euros. To give you an example, when there are 100 billion United States dollars as stable coins, only 100 million euros are circulating. So we have a ratio from 1 to 1,000. We need to accelerate and help basically in a better way our customers in understanding stablecoins, how they can use it, how they can profit out of them, obviously, and how it will fit the additional regulation like MiCA. One of the steps we took to assist our customers in their adoption of cryptocurrencies and to remain compliant is by partnering with Chainalysis Worldwide to offer their experience and proven tech to financial institutions around Europe. And this partnership that we have drafted will help ease cryptocurrency adoption while being in line with the European regulation. They have an offering, basically, that allows to deploy a cryptocurrency audit tool on transactions without, and basically this tool allows you to understand the risk level of each and every blockchain transaction that happens. They have what we believe is one of the best tools on the market. And our role at Soprasteria will be to build a bridge between a US company that offers US software and our customers, institutions in Europe, in order for them to rely on this technology, but will be the buffer between us and between them and the US. Finally, I would go with more traditional projects where we try and support regulation. As you know, 25% of Soprasteria revenue is in finance, with core banking, digital banking, financing, consulting, and integration, obviously. Therefore, when we look at regulation aspects, we are active participants in multiple payment forums. We discuss with regulators on implementation of changes in our products in order to match this regulation. But most importantly, we have experts that tackle and work on all these topics at the group level daily. Galit, for instance, which is very active in the European Payment Initiative and helps its customers on their road to building a more sovereign payment infrastructure in Europe. I believe personally that this system will be a game changer in terms of reliability and digital sovereignty. You need payment channels in Europe. You need to have them based out of Europe, and you mustn't rely on IP, which is not European. We cannot today have a fragmented ecosystem in payment. We need a European ecosystem, and it needs to come now. We are also participants, as you mentioned at the beginning, of GaiaX, basically, and the GaiaX project. And personally, I believe that we need a sovereign cloud, that it will be adopted by more and more of our customers, and that this is a very good first step. I see us as a bridge between fast-paced adoption of new technologies and large European companies or institutions that lack the IT agility and wide expertise that a group like us can offer. Inside GaiaX, we are part of the financial vertical, for instance, as you know, and we work on many topics inside this financial vertical that goes from customer enrollment with European identity, for example, or just an example that was in the last working group. But we also cover topics from sustainable finance. And as this Mr. Hack described, sustainable finance is something that is going to be very important in the following years. And we also work on strengthening the European financial marketplace. That's it for me, Laurent. I hope I answered your question.
Thank you very much. Thank you, Alexandre, for sharing our key priorities at Soprasteria. It was very clear and very interesting. We clearly do have a role to play, indeed, in the ecosystem to secure technology is aligned with Europe's digital finance strategy. Thank you, Mr. Hague, for sharing with us the European Commission agenda and showing us the way to sustainable and sovereign finance in Europe. We are, I think, definitely aligned on the same priorities. For sure, they will have, Mr. Hague and Alexandre, you will have inspired our audience. Thanks very much for your attention, and goodbye to all of you. Thank you.